Advanced Micro Devices, AMD, is a lonely AI stock down double digits in the last month. How can a company that makes chips and semiconductors that power artificial intelligence and other digital applications be down double digits while competitors like NVIDIA are up more than 50% in the last 3 months? Investors price NVIDIA at more than 40 times its current sales, while AMD has a price-to-sales ratio of 8 times. Is AMD falling behind in the AI race, or is this a temporary bleep in an otherwise rally to the so-called moon? Let's talk about that. I am Hoda, Mehr, founder and CEO of StockCard, and on this channel, I share detailed fundamental analysis and interesting investment stories. The story of AMD and NVIDIA makes you feel we live in two parallel universes. AMD says it is waiting for the demand environment to improve. NVIDIA says we live in an accelerated demand cycle. AMD's latest earnings report in May 2023 shows that the company offers a complete line of chips and solutions for AI applications, but revenue was down about 9%. The company lost money compared to several quarters of positive GAAP-based earnings, and worst yet, AMD forecasted a 19% decline in its Q2 revenue. This earnings release came about the same time as NVIDIA's roaring earnings report, in which the company announced a revenue forecast of $11 billion for the second quarter, up from roughly $7 billion in Q1. As a side note, I published a fundamental analysis video for NVIDIA a few weeks ago that you can go back and decide whether NVIDIA is a buy now. I'll leave a link to the NVIDIA episode in the show notes. Today, I dig into AMD's fundamentals and discuss whether the revenue decline and downward forecasts are temporary and whether the price drop is an opportunity for us to invest in AMD at a much better price than NVIDIA. This is going to be super interesting. I'll use our usual 6-part fundamental analysis framework to research AMD, how the company makes money, its top and bottom lines, noteworthy changes in the top and bottom lines, balance sheet strength, ability to generate cash or access to cash to invest in its future, and the current valuation and the feasibility of growing into that valuation. By the way, a detailed fundamental analysis video course is in the works if you want to learn how to research the stocks fundamentally. Make sure to sign up for a free account on stockcard.io to get notified when the fundamental analysis video course is available. AMD makes money by designing and selling semiconductor chips that run data centers, PCs, laptops, and gaming consoles, or embed them into automobiles and other data processing applications. Not only AMD designs the chips and sells them, but it also makes software that enables developers to use its products in their devices and applications. Like NVIDIA, AMD doesn't manufacture its own chips. Taiwan Semiconductor, TSM, is the primary manufacturer of AMD's wafers, and the company works with United Microelectronics Corporation, UMC, and Samsung Electronics too. AMD's revenue is relatively equally distributed across gaming, data centers, and embedded systems, and the PC and laptop segments trail the other three. That's already good news, because if we see soft demand in one segment, there are still different segments to compensate for the revenue loss. So far, so good. But why did the revenue go down in the last quarter? Where is the slowdown coming from? And how is it that NVIDIA growing exponentially while AMD slows down? AMD's data center revenue remained flat, gaming slowed, and PC and laptop and computer client sales dropped more than 60%. Embedded chips, however, grew significantly and soared. Why isn't the data center segment roaring like NVIDIA? And is the drop in the PC and laptop segment temporary? The PC and laptop segment is somewhat understandable, coming off the surge in demand during the COVID era. The company is now dealing with lower demand and had to cut prices to move its inventory. However, looking at all the new product launches, the company has several high-performing product lineup and launches in this segment that should ramp up its revenue in coming quarters. On the data center side, as we saw in NVIDIA, it seems that NVIDIA is to be the immediate beneficiary of the generative AI infrastructure rush because OpenAI's ChatGPT runs on its products, and the company already offers a whole stack of hardware and software for data centers to train and run AI applications. AMD suffered from the global slowdown of investment in data centers by large enterprises and didn't see any benefit from the generative AI heightened demand. Does this mean AMD has lost the market? As I'm researching AMD today, the company is supposed to have an AI Day presentation in 2 days on July 13th. While I don't know what AMD will share specifically during the AI Day and how the market perceives it, I was able to catch up on Bank of America and JP Morgan Chase analysts' conversation with AMD's leadership team in the last few weeks, and I got a preview of the company's AI strategy. As a non-technical investor, it is difficult for many of us to gauge the technical superiority of AMD over its competitors. However, we can deduct its technical capabilities and moat from the information available to us. Here are some of such information. AMD has been focused on AI for a while and already has live AI products in the market. But the company is putting a lot of emphasis on releasing new chips for supercomputing and AI applications in Q3 and Q4 2023 in response to its customers' demands and requests, signaling the current products need to be better. It's also made some internal organizational changes to align hardware and software teams around the needs of supercomputing and AI training models and its big customers. This means AMD still needs to successfully build a whole stack of AI-focused products. When you compare that with how NVIDIA is already in the market, powering ChatGPT, and is signing customers with its highly power efficient and full stack data center and software library, AMD seems to be playing catch up. AMD already had a response to NVIDIA's recent AI announcement, and it didn't impress the market and investors, hence a new data center and AI Day presentation coming up in 2 days from the day I'm researching this episode. AMD seems to be behind NVIDIA in the AI segment. However, the company isn't a competitor to just brush off easily. It has a solid track record of executing its plans and delivering new products based on customers' needs. AMD still has a shot. AI revenue can likely ramp up and accelerate if the management team executes the roadmap it has already planned. So on the top line side, AMD is expected to ramp up revenue through new product launches. And as the global macro environment recovers, and enterprises resume investing in data centers and computation beyond AI, we should see revenue growth to come back to AMD. What about the bottom line? In the last quarter, we saw negative earnings for the first time in few quarters. Some of the losses are due to low revenue, but the most significant chunk comes from increasing R&D expenses and the amortization of acquisition-related intangibles. R&D expense increase is an important driver of the future product releases and not much of concern. The amortization of acquisition-related intangibles is also less of a problem. It is a unique way accountants engineer profits and losses for tax purposes. For AMD, it is expensing the cost associated with acquiring Xilinx. This is good news because it means no major cost jump in AMD's operations. What about cash and balance sheet strength? There are lots of good news here. The company has more than $9 billion in cash and cash equivalents against $6 billion or so in current liabilities, leaving it with enough cash to continue investing in its products. And better yet, we see AMD generates positive free cash flow, indicating its cash position should be growing steadily in the absence of any major new acquisition or big expenses. Assuming the management team can continue to execute as it has been doing so far, and the market in data center and server sides recover globally and steadily, there aren't major fundamental concerns about AMD. This brings us to its valuation. The company is priced 8 times its sales, which isn't cheap. Looking at the company's price to sales ratio history, 8 times isn't the most expensive rate, but it isn't certainly a historically cheap level either. You could have invested in AMD at roughly 5 times sales only a few months ago. Looking forward though, all else equal, to grow revenue by 8 times in 10 years, AMD has to increase revenue by 23% per year. The AI chips market is expected to grow more than 40%, while the broader semiconductors market has a much slower growth rate of under 10% per year. Therefore, the 23% per year revenue growth requirement isn't far-fetched and sits between the two markets' growth rate. Moreover, if we look at AMD's revenue growth in the last 3 years, it has grown above 40% compounded annually despite the recent slump. All in all, AMD isn't a cheap stock by any stretch of the imagination, but compared to NVIDIA's 40+ price to sales and AMD's possibility of growing revenue rapidly, it isn't exuberantly expensive either. Let's recap AMD's fundamentals. Revenue has been declining due to macroeconomic factors, but is expected to ramp up with new product launches in the AI space and the broader market recovery. The company has turned losses for the first time in several quarters, but the losses are due to accounting adjustments related to acquisition-related amortization and increase in R&D. The company has a good balance sheet with more cash than current liabilities. It generates free cash flow, and valuation is less exuberant than the likes of NVIDIA, or considering the possible revenue growth in the next semiconductor upcycles driven by AI. Knowing all that, what should we do with AMD's stock? Is it time to buy now? Well, agreeing on the fact that investing is a game of possibilities and betting on the probabilities of success, let's discuss 2 possibilities for where AMD can go from here. On one side, AMD can release its AI products to compete with NVIDIA's full stack hardware and software AI solutions and libraries, and it doesn't ramp up revenue as fast as we'd like to. The stock will most likely tumble from here. It doesn't mean AMD is dead. With $9 billion in cash on the balance sheet, the company will push forward and eventually catch up or take market share away from NVIDIA. But that means if we invest now, we must watch NVIDIA and other AI stocks soaring while waiting for AMD to catch up. The second possibility is that AMD releases its products, the market loves them, and customers order up. The company revises its future revenue forecasts and joins NVIDIA and other large players such as Apple and Alphabet, who are also making their own AI semiconductors in sharing the AI market. In that case, buying the stock now means buying a stock at a great price, enjoying a massive upside. But we need more information to decide which scenario is more likely. To me, this is one of those cases where if you like a company fundamentally and trust the management's track record in implementing their plans, you can pick up some shares now and add more as you collect evidences on its ability to scale revenue, ramp up, and compete in the AI space while not losing market in PC, laptops, enterprise, and gaming segments. One thing for sure is that the AI revolution is just beginning, and there is a lot of time for chip makers to innovate and grow. 2023 is one of many chances to buy AI chip stocks and win big. This is a multi-year, if not decade-long, major technological cycle and most likely full of volatile ups and downs. AMD is a part of such a cycle. See you next time.